Where is the price of gold set today? In the Shanghai market, which is a real market. It's a physical transfer market. You could talk about futures. Futures have been around for 5,000 years. Futures are not a bad thing. Futures are a good thing. You can talk about naked short selling in futures. Again, it's fraud. It's a zero-sum market. For every commodity and every trade, there's one buyer and one seller. So you can't possibly have naked short selling. The Chinese and the Orient has controlled the price of gold, certainly for the last year or two. Right now, the Chinese government is actively supporting Chinese citizens buying silver. Why are they doing that? Why would anybody buy silver right now?
Because it's money.
No, because it's cheap.
The global gold and silver markets are undergoing a significant shift, with China emerging as a powerful player that's reshaping how these metals are priced and traded. According to Bob Moriarty, the key question investors must ask now is, where is the price of gold being set? It's no longer just New York or London dominating the conversation. Increasingly, Shanghai is becoming the center of gravity, offering a physical, delivery-based market rather than a purely paper-based futures system. China is intentionally opening its commodities markets to the world. The Shanghai Futures Exchange has launched a plan to facilitate easier participation by foreign investors, supporting China's goal of making Shanghai a global financial hub and expanding yuan-based pricing, particularly in gold trading. Chinese authorities have pledged to deepen cross-border financial services in Shanghai. A policy plan released in April emphasized the need to encourage international investors to gain greater involvement in the nation's trading platforms. The aim is to further integrate China into the global financial system while promoting the use of the yuan in commodity pricing. At the same time, the London Metal Exchange, owned by Hong Kong Exchanges and Clearing, is preparing to add more warehouses in Hong Kong. This move is intended to ease logistics for mainland Chinese businesses, particularly during periods of market stress or price fluctuations between Chinese and international metal prices. Moriarty also addresses a long-standing concern in the precious metals market: manipulation. While accusations of market manipulation often spark debate, he argues that such manipulation isn't a conspiracy, it's a structural feature of all financial markets. In other words, manipulation is not the exception but the rule, and savvy investors should expect it rather than be alarmed by it. When it comes to silver, much of the metal coming off the COMEX isn't destined for factories or industrial use. It's being bought for investment. Yet, the proper flow of silver remains opaque. It essentially moves from refiners directly to industrial users, bypassing the public view. The investment side of silver, primarily through paper instruments and derivatives, is increasingly seen as detached from physical market realities. Make sure to tune in for our expert analysis. Don't miss out on future content. Hit the subscribe button and turn on notifications to stay in the loop. Your support is greatly appreciated.
Well, Rick Rule was dead wrong. He was talking about a few years. He should be talking about a few days or a few months. What's going on in Japan with their bond market right now? Nobody ever talks about is they don't compare like things. If this happened, this will happen. And one of the very biggest reasons for buying gold or owning gold is the Japanese bond market and the U.S. bond market, because they are collapsing. Okay, now the Bank of Japan owns a majority of the Japanese bonds, and the Japanese bond interest rate is shooting sky high. I've looked this up before, and anybody that wants to know how much there is outstanding in over-the-counter derivatives, go to BIS.org. It's the Bank for International Settlements, and you can look up the numbers. But it seemed to be there was about $800 trillion in derivatives. And the key is, and you've got to look at the derivatives table to see this, what are most of the derivatives associated with? Now, you got derivatives on bonds, you got derivatives on currencies, you got derivatives on corn, you got derivatives on gold and silver. 80% of derivatives are linked to what?
I'm going to guess U.S. Treasuries.
You're close, okay? It's not U.S. Treasuries, but it's Treasuries in general. It is interest rate sensitive units are 80% of derivatives. So when you're talking about derivatives blowing up, you have to look at where is the big bomb, and the big bomb is in interest rates. And the key to understanding the danger of derivatives, they are a zero-sum game. Okay, you have one winner and you have one loser. Now, gold and silver bugs tend to look at gold and silver derivatives, puts and calls. However, those are almost meaningless. The Canadian dollar has more bets on derivatives than gold does. Okay, so while gold and silver may be important to us, it's not important to the world's financial system. However, interest rates are. And if you look at the Japanese bond, the interest rate is shooting through the roof, and it's actually higher now than U.S. Treasury interest rates. And the U.S. Treasury interest rates, the 30-year interest is above 5% now, and that is the point at which they pulled the pin from the hand grenade, released the spoon, and the fuse is burning. Okay, so Japan affects the U.S., and the Japanese bond market is blowing up, which means derivatives are about to go sky high. Now, while there's 800, I'm trying to think of the number. I can't figure it. It can't be 800 trillion. That's too much. So it's 800 billion in derivatives, and those are the over-the-counter derivatives, but the off-the-books derivatives are 2 or 3 times higher than that. So what I'm saying is there's an enormous amount of money sloshing around in the world's financial system. How many financial markets are not manipulated? Okay, as soon as you're reading something or viewing something and somebody uses the word manipulation, that means the person has no idea of what they're talking about. It's the same thing if you're listening to a financial advisor and he ever uses the term guarantee. That's a red line. Okay, that means it's fraud. All financial markets are manipulated, and we don't care. And the reason we don't care is because they're all manipulated. Okay, it's like saying the sun rises in the east. Well, yeah, it does. Okay, but why would we care? Because that doesn't change from day to day. When you look at it, when you talk about the deficit, that is the difference between yearly production and yearly consumption. And that is not significant, because a true deficit would be the difference between total supply and total demand. There have been 50 billion ounces of silver produced. There is so much silver above ground that you can literally go for 5 years with a deficit, the difference between current production and current demand, and it's relatively meaningless. But the real key to the silver market right now, okay, where is the price of gold set today? In the Shanghai market. Okay, which is a real market. Okay, it's a physical transfer market. You could talk about futures. Futures been around for 5,000 years. I was a commodities broker. Futures are not a bad thing. Futures are a good thing. You can talk about naked short selling and futures. Again, it's fraud. It's a zero-sum market. For every commodity and every trade, there's one buyer and one seller. So you can't possibly have naked short selling. The Chinese and the Orient has controlled the price of gold, certainly for the last year or two. Right now, the Chinese government is actively supporting Chinese citizens buying silver. Now, why are they doing that? Why would anybody buy silver right now?
Because it's money.
No, because it's cheap. Okay, we got $32 or $33 silver. It was $50 on January 21st of 1980. We are so far away from the all-time high in silver. But in 1980, the ratio was like 17 or 18 to 1. Right now, the ratio is about 101 to 1. So the reason to buy silver is because it's cheap. And while the Chinese government has been behind a lot of buying gold, now they're supporting silver. And if people can buy it, we're in Europe. You can actually buy gold coins in Europe without duty or VAT. Okay, you can't do the same thing with silver coin. Okay, so silver's hard to buy in Europe, but it's easy to buy in China.
Bob Moriarty emphasizes a fundamental economic truth that often gets overlooked in political debates. A tariff is a tax. When tariffs rise, taxes rise, and the burden ultimately falls on consumers. The impact is not evenly distributed. Tariffs are a regressive tax, meaning they affect lower-income individuals more harshly than the wealthy. While affluent households can absorb rising costs without significant lifestyle changes, those with limited income struggle to keep up as prices climb. Every day, essentials become more expensive, and those who are least able to afford the increase suffer the most. This insight comes at a time when U.S. economic policies are increasingly favoring high-income earners. Republican lawmakers in Congress are pushing a new tax and spending package, dubbed the One Big Beautiful Bill Act. The bill aims to make permanent the sweeping tax cuts introduced in 2017 under the Tax Cuts and Jobs Act of 2017. Supporters argue the legislation will reduce government spending, stimulate job creation, and make the federal system more efficient and responsive. House Speaker Mike Johnson described the bill as a tool to make government work more effectively for all Americans. However, the reality of the bill's benefits tells a different story. While the TCJA did offer some relief to middle and lower-income families, such as doubling the child tax credit and lowering most tax brackets, the lion's share of the benefits went to the wealthiest Americans. If the proposed bill becomes law, these advantages will be locked in for the highest earners, allowing them to save hundreds of thousands of dollars annually. The contrast is stark. As lower-income Americans face rising costs due to tariffs and other inflationary pressures, wealthier citizens could see even greater tax savings. The combined effect is a widening gap in economic well-being. Let's get back to the interview.
We do the same thing in the United States, and there is a really excellent book called The Fourth Turning that was written in 1999 by two authors. And it said, basically, you have four different turnings. Each turning is a generation. It's about 20 to 22 years. And the fourth turning is the crisis phase. And it's when governments start going totalitarian. And I see things, I'm 78 now. I'm cynical, but no matter how cynical I get, I just can't keep up. The Democrats were so corrupt. Okay, it staggers me that they've come out and they've admitted that Joe Biden has terminal prostate cancer, and they act like it happened last week. And this whole scenario goes back to the fourth turning, where governments decide anything they want to do, it's perfectly okay. And clearly we've got it in the United States, they've got it in Georgia, they've got it in Romania. They're doing the same thing in Germany. They're doing the same thing in the UK. And it's a function of the time. And here's where it gets interesting. And that is, where does it lead to? And in the book, The Fourth Turning, it says people can do one of two things. They either can go along with this great reset, do whatever the government wants and literally become slaves, or they can opt for freedom. And I see a freedom move underway. And candidly, you and I and others on the internet are trying to lead the way there. People now recognize that everything the mainstream media says 100% is a lie. Have you watched the mainstream media talk about the meeting between Trump and the president of South Africa? The South African president said this is a conspiracy. I mean, these people just made it up. There's no genocide going on in South Africa. And Trump said, oh, really? Turned on the television and showed the video of one of the major party leaders with 10,000 people in a stadium screaming, kill the board. Okay. Yeah. When I used to travel, and I haven't traveled since COVID, but when I used to travel a lot, I went to South Africa several times. South Africa would be the most wonderful country in the world to live in. It's so rich in natural resources. However, if you're white, they'll kill you. And that 20 years ago. Okay. So it's all linked together, and we are coming to the end. The world's financial system is about to blow sky high. And when we come out of that, if we come out of that, it's going to be a different world. This is the end result of a big conflict between the debt-based system of the West and the resource-based system of the East. And what we have is total corruption in the debt-based system of the West. He's not a madman. He's a mafia don. Negotiates with the baseball bat. And you know, how successful is that? Oh, we've seen this movie before. What kills most mafia dons?
Another mafia don.
Exactly. Okay,
yeah.
not prostate cancer, for crying out loud. But the idea of attacking all your business partners and your leading corporations, I frankly think it's a really bad idea. Now, I've got a friend in Miami who sends stuff to me when I need it and forwards mail to me. And I ask him what it's like. And he said, if you go into Walmart or Kmart or even drugstores now, prices are just shooting through the roof. And I think the actual tariff on Chinese goods is like 38 or 39% when you add up all the pieces. And the idea that Walmart could absorb a 30 or 40% increase in prices is patently absurd. But, you know, if you belong to the mafia, you just get your baseball bat out and say, but what does the president have to do with telling corporations what prices they should charge? If you go to a food store, their margins are about 3%. Their ability to absorb a 30% tariff is non-existent. So what Americans need to know, that's very important, and not Americans, everybody needs to understand this. A tariff is a tax. And if you increase tariffs, you're increasing taxes. It's a tax on the consumer, and the price is going to go up. Now, it's a regressive tax. Do you understand the term regressive, what it means? It affects the poor a lot more than it affects the rich. Okay. Income taxes are not regressive, and high income taxpayers over the top 10 or the top 1% pay something like 54% of all income tax. That is not a regressive tax. People with income under the 50 percentile actually get more benefits from the government that they pay for. But the tariffs are a regressive tax, and it hurts people who have the least ability to pay increase in taxes.
As Asia accelerates its influence over precious metals pricing and trade, long-standing financial centers are being challenged by the dynamics of emerging markets. The shift from speculative paper contracts to physically settled exchanges signals a more profound transformation in how value is determined and wealth is preserved. Meanwhile, domestic policy moves, such as tax reforms and trade levies, are reshaping the domestic economic landscape, often to the disadvantage of lower-income households. This combination of global and national developments underscores a pivotal moment in both financial markets and policy frameworks, where the distribution of risk and reward is becoming increasingly imbalanced. Will the global tilt toward commodity-backed systems and the domestic favoring of top earners create a lasting divergence between financial resilience and economic inequality? Share your perspective in the comments section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.